Welcome to Taking Stock. It is the 25th of October 2023. 2 months to Christmas, everyone. Is Santa on his way? Let's hope, Johnny boy, eh?
Yay.
There we are. Cashmere John or the Grinch. Every season, see, John, you're relevant. See, Grinch for Christmas, Cashmere John in the winter, and Beach Top John in the summer. Thank you for joining everyone live, as always. If you listen to the podcast, try and join us live one day and comment, like, share, subscribe, all that stuff. And don't forget, download that Box Markets app. If you haven't done it yet, give it a try. It's free, and you'll thank me for it. Okay, so the question is today, is it time to buy UK stocks? And I tell you what, in the last few weeks, or months even, there have been many companies being taken out, acquired by either UK businesses or US businesses. And we've got On the Market that's been acquired, SCS Group, Kin & Carter, Technology, yeah. Restaurant Group, Pendragon, all of them. And the people acquiring these businesses are not stupid. They've done their research. They've done their due diligence. They know about valuing companies, and they know about earning money long-term from investing in companies. And so to me, this is a good sign. In fact, it is a sign of the bottom of the market, John, isn't it? Where you get a lot of acquisitions happening. Do you think?
I think so. The UK market is very cheap. I mentioned it the other day, but it's something that Jamie Constable of Singer pointed out. And that video is up on site now. That a fifth of
worth watching.
Fifth of the FTSE are trading on single-digit PEs.
Yeah,
all guys, please. It's absurdly cheap, certainly relative to other markets. And yeah, there's some earnings risk behind that. But you know what we're seeing, and we've got some trading updates that demonstrate this, is actually, you know, a lot of the risks are discounted in, you know, and that's what the single-digit PEs reflect. And you know, some of the sort of caution over earnings forecast is unwarranted. But you have to be careful and find the right companies. And there's a few out today that fit that bill.
That's exactly it. Now, let's say it's a stock market. It's a market of stocks. You still got to find good businesses that are undervalued. You still got to do your research and try and find some around. But John mentioned quite a few the other day, and you know I'm holding a portfolio worth of them. But look at this. And the more the AIM all share goes down, the more I'm convinced we can have a massive rally towards the end of this year, because stats stack up very well on this, especially after a sell-off. The AIM all share has been down for 21 days. In the last 25 days, that's 84%. And UK is a great place to invest, full of sharp entrepreneurs. In fact, listen to this stat. This stat is amazing. British startups have attracted $15 billion of investment from venture capital firms so far this year, cementing the UK status as Europe's top hub for young, high-growth companies. It outstrips 8 billion by France, almost double what France, attracted in investment, and more than double of what Germany's attracted, 7 billion. Means the UK is only smaller than the US and China. And of course, you can't compare them because they're huge countries with multiples of our population. But nevertheless, nearly double. And in fact, our GDP is better than Germany and France. Brexit, eh?
I mean, they're very different types of economy. I mean, you know, we should get too political about it, but the UK has incredible universities. You know, we're on the world stage. I mean, you know, we talk this country down quite a lot, but our universities are, you know, world leading. Yeah. It's not just Oxford and Cambridge. You know, you've got some fantastic universities in the top 10. Imperial College. Yeah, I think is in the top 10. You've got UCL, but once again, another London university. You've got some fantastic Russell Group universities, you know, and, you know, Southampton is a very good one down near you, Justin, particularly on the engineering side of things. Manchester's very good on the engineering front. So, you know, you've got fantastic brains in this country. And it's not just, you know, British brains, it's brains that come from all around the world, study at these universities. And fantastic IP comes out of that, which can be turned into fantastic companies. And, you know, and that's just a fact. UK universities are world leading. Yeah, they are. And we do, you know, maybe not to the same degree as the US, but we do have an entrepreneurial culture here. And, you know, we have very strong positions in specific industries. Life sciences, incredibly strong, and tech, arguably. You know, a lot of the innovations in AI that we're seeing coming through now have come from the UK. You know, DeepMind, obviously, which is acquired by Google, being the big leader there. So yeah, it makes sense, and it doesn't make sense that, you know, the UK is so you know, out of favour, so talked down that actually yeah, you've got to start to see. I think we've got some government issues that stand in the way of this. That's all I would say.
That can happen in every country, but yeah, I mean,
it's pretty bad.
The inconsistency of government, and I think even from within has to change. And what government has to understand is, well, you need to stay. I think if you're at a position of authority in the cabinet, you've got to be there for a certain amount of time. You can't just flip flop between departments all the time because there's no planning. There's no forward planning. You should look 10, 20 years in advance. And I said, we have the talent here. Come on, Britain. It's an amazing country. It really is a part of it. It is talked down a lot. The tech we got there, like I said, investment, VCs not stupid. They know. And so what I'm saying is there are companies on AIM that are very good. There are companies that are very bad. It's down to you to do your due diligence, but there are companies I think will rip up, achieve multiple gains over the next few years. And I think the bull market, do you know what the catalyst, you were talking actually with Jamie yesterday, and very interesting, largely, I'm in agreement with what he said. I've said that several times, saying that the interest rates, they say higher for longer. They may be obviously higher than we've seen the last 10, 20 years, interest rates, but I do believe they'll start to roll over when they start to see that inflation will tick down below interest rates and the economy getting worse. Then they'll start to do something about it.
I think so.
But and I think also we'll have a Santa rally. That will be the catalyst. And roll over a little bit and then realize people think, wow, that was a heck of a, there's going to be a heck of a rally by the end of the year. I honestly think that. And then that will be the catalyst for more money inflow and buying begets buying. That's why I'm saying, take your positions, do your research. Don't jump in crazy, but good companies will always outperform, I think. And there are good companies on AIM. Anyway,
I mean, I do feel like I'm playing a bit of a game of chicken with the markets, sitting there on the sidelines with cash, waiting to deploy at the right moment. So, but, I'm sort of thinking it might be time to get out of the way.
Yes.
There's a sort of juggernaut of potentially good news coming our way.
Yeah. A regular, in fact, who's the first commenter today? We should go, Mr. Steve. I'm guessing the answer is still no. Well, Steve, you got prize for first comment, but no prize. Prize taken back off you for negativity. There is some amazing, compelling investment value opportunities out there right now. Absolutely, there are. And I'm not saying go crazy. And in fact, Shrew comes in every evening and watches the video here on Catch Up, and he does comment every day. Shrew, the vegan Westie, says, as the greatest, most famous and richest long-term investor of all time, Warren Buffett says, forget about macroeconomics. Forget about worrying about if we are in recession or not. Focus on individual companies and their accounts. That's spot on, the accounts. That's it. Don't worry about little rallies here and there, but the accounts. There are gems to be found all the time. There are gems to be found, yes. And in fact, we'll look at one of them. That's someone just says there, AGC2, positive trading update from Oxford Metrics.
Love it.
Today.
Love this company.
Yep. 64 million of cash and trading ahead of expectations. Before we get into that, let's look at the broader markets, just see where we are and the bigger picture of things. The only one ticking up today is the FTSE 100. And that's a smidge up, 0.05%. Everything else is down. In fact, FTSE 250 is the biggest faller, which is domestic companies. It's the largest mid-cap domestic companies. AIM all share. In fact, it's even worse than the AIM all share. But biggest rise, Rio Tinto, Lloyds, of course, results out, raking in billions of profit. Profiting from not raising interest on saving accounts and charging people lots on loans. That's what the complaint is. But a lot of these are selling off yesterday, but a lot of minus rallies. Apparently, China is going to issue about 140 billion of bonds, I think, to support the economy. So maybe that's it. Ocado, John, your favourite, it's down. You must be gutted.
Any news there? I don't know that there is.
It just wobbles around, like you said, like a small cap, isn't it?
Reckitt,
Benckiser
have got news out today.
St. James, I feel, is under the cosh. They've had a lot of scrutiny.
The Reckitt news is worth looking at. I mean, that's a big fall. I mean, what is it there? 5 and a bit %. I mean, that is a big fall. It's very weak trading in its nutrition department. This kind of suggests that something we talked about recently was, the sort of the kind of battle between, household budgets and branded products, brand loyalty, and who's winning that. And it's a tricky one. I mean, there's been some other factors at play here, but this was a very weak statement. Very weak statement. Volume's not really doing well at Reckitt.
That's a horrible choice. That is what's got. There's 3 states for chart. I keep reminding people: up, down, uptrend, downtrend, and range. And that is a range. You can see there. Actually, it's right on if you look at that, it's right on the low of that range. And like I said, the reason why you shouldn't try and change, unless you're paying a nice dividend, the reason why you shouldn't trade ranges is to go break down below that range. It's always better to go for an uptrend. But let's just take the 50 off to make it clearer there. But yeah, look at that, right in the bottom of that trend. And in fact, that's going back now, almost dips. Look at that, you see it dip down to there in 2020. Is it March? Yeah, that's the COVID dash for cash dip that was down there, there. But this is a different result. That's an uptrend. There we are. Look at that. And that was a fantastic uptrend from what's been going on for years. Look at it.
Oh, this was
2000. It was
an incredible wealth creator.
It's a 10 bagger right there. Over 10 baggers in 10 years. Yeah. But now, when you get that, you're going to have a bit of for years, because you've had a party there for 10 years, pretty much, and you're going to have a range for quite a while. And even there, look at that, the previous high, and obviously it's a long time between these, but nevertheless, the fact they couldn't get higher than that, the previous high on June 17th, 2017, means it's going to look at drop off a cliff there. So anyway, let's go to the front page of Vox, because Victor has covered Oxford Metrics we talk about, and it's a typical example of an excellent company, based in the UK, that's globally relevant with their technology. But I did a video on them recently, and I got this cash wrong on the video. I did get someone saying you got the cash wrong there, and I thought, what? Because they had cash, then cash in invested cash, which is in market funds, or whatever. But they've got like 64 million
massive cash.
Yeah.
So 64.8 million of cash. Wow.
Yeah.
I mean, that's
so
that's
EV,
quite something.
What are they now? They're sort of 112. So they're basically, EV is 60 million. So they are literally on just over one-time sales for a company that's profitable. That is a good. I mean, the only worry here is, like I said, is that the chart's a bit messy. It's a bit in a range, and it's the same kind of thing as Reckitt is a massive uptrend, and it needs this consolidation level, this trading range with the bulls and bears to fight out. And it has jumped today and come back down, but it needs to get out of that range essentially. But it's a good company.
It's fantastic. I mean, the kind of stuff it works on is incredible. So it's basically, I'm sure we've all seen the footage of Andy Serkis dressing up in a leotard with lots of little dots on it.
Yeah.
To turn him into Gollum. But so this company is very big in the entertainment world. Computer gaming is a big market for it, but it also can apply this technology elsewhere into markets like life sciences, sports science, lots of sort of academia, analysis, virtual twinning, which we talked about yesterday through this system called VINO, artificial intelligence. Well, a lot of it will be artificially intelligence driven, but virtual reality. So yeah, I mean, these are absolutely fantastic numbers. New CEO coming in as well. So
Imogen, I just connected with her on LinkedIn. Yeah, so she seems like she's a very good track record as well. Quite, looking quite promising. So Simon says, "Is it time to buy UK stocks? Yes and no." Some stocks seem to have found a floor, particularly micro caps. Others, particularly dividend-paying stocks, have not yet bottomed. Could be pre-Xmas rally. Yeah, it's all right.
I mean, there's probably some truth in that. Over. Yeah, because I mean, if you look at the FTSE 100, vis-a-vis the FTSE 250 and AIM, or various small cap indices, the 100's held up, pretty nicely.
Yeah, look at that.
And there are various factors at play behind that. Obviously, the rise in inflation, interest rates.
I don't know what I've done there. Lots of circles. Yeah, no, but it is. Yeah.
So obviously, the energy crisis has been good for sort of big oil companies, BP Shell. The inflationary crisis has obviously boosted interest rates, and it's created the opportunity for banks to milk their net interest margin. So lots of factors that, and obviously just the general, seeking out of defensiveness. Companies like Unilever and Reckitt, but I do wonder whether we're going to start to see a reversal here. Small companies, over the long term, do deliver.
Yeah. I mean, it's only down 8% from the high, literally in 2023. Exactly. And I'll tell you a comparison. And so that's the FTSE, a 100. Here's the 250, and literally, you can see that is down 30% from the high in September. That was back, and if you look at it, do you know what's telling? I got a mixture sort of in my fund of both of them, and you can see it's more mirrored towards this. In fact, you can see that downtrend. and it is it's mirroring the FTSE here a little bit, where it's trying to these lows. Is like I said, that could break lower. I don't really mind if it breaks lower because I'm accumulating this over a long period of time, so I'll get paid more dividends, more, and I'm only 5% down.
Yeah, I'm just looking at over the last couple of years, top risers on the FTSE 100. Centrica, up near the top. BAE Systems, for obvious reasons. Shell, BP, 3i. 3i, big VC investor actually, but then you've got Rolls Royce, which is obviously a recovery play, but certainly a beneficiary of. But in fact, a lot of recovery plays at the top of the FTSE 100.
Oh yeah, I got
one of the Rolls Royce, Pearson. They've all had an absolutely shocking time for a number of years. So that's helped. But then, as you'd expect.
Yeah, I've got many alerts on a UK FTSE stock. Quite a few of them set up. I mean, and this echoes what Andy says here. Afternoon, guys. Is it time to buy UK stocks? Problem is, many UK stocks are in downtrend, not the same. The FTSE 250 index is at the 50 weeks lows, and we may have a short-lived rally in November, December. Yeah, but I think that'll be the catalyst. Never underestimate the power of fear of missing out, money inflow. Selling begets selling, buying begets buying, okay? That could be just the catalyst, especially when you see on November 2nd now, the Bank of England, almost keep interest rates where they are, saying the medicine's working. But in fact, there's a story about that later, but they don't want to let the market know that everything's okay. Of course, do fundamental research, then look at the chart, and then put an alert on the chart, and do something else.
So just going back to that comment, it's something we've talked about before, that's why I'm sort of, buying into a downtrend is tricky. Yes, painful. You might miss out when something bottoms and starts to jump again, but so what? Because then you lose out on a small amount, potentially of upside, and you've got that trend, supporting you. I mean, the other thing to do is never exit the market and stay invested across the board at all times, and then you never miss anything.
I'd say that with funds and big dividend-paying stocks are massive. That obviously, but I would smaller caps, mid caps, nano caps. No, it's too painful.
I think that's true.
They can do about 90% down. So
and
when you see sort of Buffett and Munger talk about that, they're not talking about micro nano caps on AIM. They're talking about big, sort of S&P majors. That don't really. I mean, they can have a variation, but they don't worry too much. Okay, let's quickly look at the boohoo. Look at that. It's literally
Mike Ashley, Mike Fraser.
Yeah, Mike Fraser. All right, son. You know what? I look back. I was doing the editing the last video, putting the timings in. I noticed I called him Mike Fraser. I've been calling that from now on. So it makes it Mike Fraser. He's old Mikey. He's topping up in boohoo and ASOS. I mean, I think the only value here for investors is it may rise on this attempted buyout of them, but he's using them as brands, isn't he? He wants to acquire them, use their sort of.
That's true. That's true, because obviously Boohoo's bought quite a few brands itself. Bought things like Karen Millen, some various fast fashion brands. ASOS, whatever you want to call it, put out some news. It's delayed its results. Got some audit issues going on there. So if you slight concerns in the fast fashion space as per usual. Yeah,
if I were them, I'd delay it until Christmas Day. When everyone's watching telly, isn't he? So that, I mean, this is unbelievable. This is what I'm saying. I mean, they're not small companies. Boohoo 92% down. It's okay topping up a fund, I think, into big sell-off bear markets, but if you're dealing in small micro nano caps, you can't do that. You really can't. It's going to kill you. It's going to kill your portfolio.
I mean, ASOS has said, actually, so I missed that it's downgraded guidance again. And I'm sure it wasn't very long ago that it downgraded guidance.
How it gets to the stage where you keep downgrading. Sooner or later, you get an upgrade from the downgrade, but it's still not as good as it was previously. But still, if you really downgrade it, look at that. But that now they downgraded today, have they? Or was it the other day? Because that hasn't really. I mean, how far can it go down? But literally, when you see that. And in fact, something that Jamie mentioned actually about house builders we talked about, when you see bad, profit warnings come out from companies and it's already priced in because they don't move that much, you think, okay, we are near the bottom of the market here.
That certainly seems to be the case here. When it's down a little bit, 2% or so, but not a horrific down, share price fall, which when you see delayed results because of some audit shenanigans and another downgrade, you would expect a whopper of a fall, but it just hasn't happened. I think, that's potentially true.
Yeah. Riff Soft says, I think if you buy good stocks now, you won't regret it in 5 years' time.
Agreed.
But they could go lower from here. True.
Agreed.
Absolutely true. They could go a little bit lower, but in 5 years, if you're looking at that's your outlook, you're fine. Rob, yes. Do you know what? I just sent a message to John about Ethernet. I said, what's happening here? I thought they went bust. This is like Ethernet, which is like a company, an Israeli company, and I don't know what they do, but they're up 200. I'll show you there. They're up 230% today, but I'm sure they filed for administration. I thought a couple of weeks back. Now they're saying they've raised 90 grand, but they're not sure they have raised 90. I don't understand what's going on.
No, this falls into the I can't be bothered to look at it category.
Yeah, exactly. And it's only 1 point. So I would like literally. They're probably going to administration. I don't know what's happening there. Something odd happening, but it's not. One of the things I always say about investing: try and find good businesses that are prospering, doing better. This is not maybe a trade opportunity if you want to jump in and out for a couple of quid, but it's such a small company. The liquidity isn't big enough to put big amounts, and why would you want to do that? And put a big amount in a company that's obviously failing in some way. But
there's some great companies reporting good news today. A lot of it on the homepage. Hargreaves Services. This is an interesting one.
Yeah,
really interesting. I mean, it's sort of a combination of. Well, they do industrial services, which is an electrical mechanical engineering. They do a lot of earth moving, and then they've got a land division, which basically is taking brownfield land through the planning process for residential, commercial, and renewable energy construction. And they've got a sort of commodities recycling business, which is having a bit of a tough time, as the commodity markets are generally, steel recycling. But yeah, it's. It's sort of bouncing, but I mean, this obviously interest rate sensitive because it's involved in house building, commercial property construction, but the shares are so cheap, 6 times forecast earnings.
Yeah.
Again, not it's got a bit of debt, but not a great deal. Lots, cash on the balance sheet offsetting that debt. And it's in the right space. The country needs more homes. And I say brownfield is the most sensible place to be building those homes. Needs more renewable energy. So here we have something really tapped into that strategy and more infrastructure. So I think there's been a bit of nervousness because of the cancellation of HS2 phase 2, which it was potentially going to be involved in because it's in HS2 phase 1. But yeah, that is not the only infrastructure game in town. There is a lot more infrastructure that needs to be built in this country. And so it's come down a recent low in October 2022, then bounced up, and I started trading up higher highs, higher lows, and all of a sudden recently down to HS2 maybe. Yeah, that's what I put it down.
Lower channel, but it's trying to rally a little bit today. But
but it didn't have any HS2. I think that's more hope than what the company had guided to. I don't think there was any actual revenue HS2 revenue in the forecast because it's been uncertain what the future of that project is for some time. But I think there's enough out there for this company to continue doing well, and enough in the coffers to support whatever expansion comes next. To support the strategy.
Yeah,
so that's a good one. IG Design not on a homepage. Well, I mean, really decent.
In fact, it was one of the only rises there on news was IG Design. IG so is IGR's ticker there, and trading update looks decent, doesn't it? And so 6 months ahead. So they do say the group can make good progress on its journey to improving operational efficiency. What are they? Basically, they make cards and stuff. They say celebration, gift packaging, all that stuff. All
sorts of anything, any sort of Christmas gift package, any greetings cards, the lot. Okay. And they do a sort of combination of their own designs and licensed in stuff, both in the UK and the US. And what they're essentially saying here is that margins are improving because in the US they've exited some unprofitable contracts, and that means the sales in the US are going to dip slightly, but profits are holding steady. So yeah, it's the other thing a lot of companies like this were struggling with was obviously cost increases, inflation, the cost of shipping stuff around. So they're going to benefit from that tailwind as well. Yeah, and again, it's there is a slight read across the card factory, which is
Yeah,
Again,
well, exactly.
very
I
good
mean,
numbers
people who missed out on Card Factory probably going to think, "Oh, here's another one." Yeah. So, and this one hasn't really rallied, but you see,
No.
it's gapped down massively here on two gaps. I assume these are a month's past because October. Yeah, these are results times. Always worth looking at the chart. When you see big gaps in that, go back and read the results. And the gap, go back and read what happened here, and there probably are results where they've had traded out. But even now, look at this. This is an obvious thing. Look at the chart. You've got pretty much a series of higher lows. There's broken 200-day moving average up here, series of higher highs. It's rolled over here now. That's a little bit of worry. Another gap here. Look, obviously a trading update somewhere. What's happening there? But it's trying to gap back up. But as yet, it's trying to get back into a uptrend, but it's in a bit of a range there now. But,
yeah. I mean, they're paying off debt very, very quickly as well. So they've got a few tens of millions of quid on a balance sheet in borrowings, but the forecast is for that to be paid back very, very quickly. So pretty cash generative too. Yeah. It's and as you say, bottom of that trading range in terms of the share price.
Yeah, one of us followed. Yeah, sorry, one of us follows Oxford Metrics.
Makes sense.
QBT. I think Bitcoin's come off a bit because I don't know whether that's happening. Whether the actual is it a rumor of BlackRock doing a Bitcoin ETF or something? I don't know whether it is, but
there's a couple of it. I think Fidelity's looking at one as well.
There's always rumors of that. People just noticed something registered with SEC or something, or Nasdaq or something like that, and then they pulled it, BlackRock, and they registered the ticker or something, and they pulled it. So I don't know whether they have a plan to do it in the future. But that was the rumor that sparked that, and that's why QBT and all other sort of stocks rose. Belluscura. We'll cover the rest of the news up here in a bit, but Virgin Wines. I've always thought that was a very small market, just marketing wines to virgins.
Hey,
look at that, John. There we are. Belluscura. I originally thought they were going to be taken out, and I thought, no, hang on, they're not. No. They basically acquired a company with cash. Haven't they? 4.7 million in cash.
Yeah, I think they'd already. I mean, they told us this before. I thought, but yeah,
the valuation's gone down. It was six. I mean, for TMT now, it's obviously more favourable. Well, I don't know how they're structured. It's a very complex structure. They get shares in that. They get shares in this. But they acquired this thing, and it's got 4.7 million in cash. Pretty much, I think that's what's happening.
Yeah. I've looked at the
share
price today. What has it done?
I suppose why that's happening is this market is very hard to raise money. That's probably an easy way of doing it in just acquiring a company with lots of cash, isn't it?
Yes, Wasn't TMT an investor in Belluscura? I can't remember exactly.
Oh, I don't know. TMT Investment. Oh, that's why it's that's why the valuations come down, Nick, because the chart is going down there. But there we are. But
I don't know off the top of my head. But it sort of makes sense as a way of raising money.
I don't know what it means for dilution, or how better it would have been gone to the market. I don't understand.
I assume these calculations have been made, and this is a better way to raise money without diluting the shareholders as significantly. I mean, it's got a cracking product, and there are orders coming in, and there's definitely a market for this stuff. I mean, it's basically COPD, and a lot of that both in the US and Asia.
Yeah.
So cracking product, cracking market opportunity. Just needs some money to get to exploit that, and maybe this I assume, as I say, they've crunched numbers, and this is the most sensible way of doing it.
Yeah. Look at this. Some of those follow. You mentioned CAB yesterday. It sells 78%, another 8% there. This is why you shouldn't jump on falling knives. The chance of it, literally bouncing massively the next day in this market is hard work. So, and you say always wait until a trend happens. In fact, he hasn't even got a 200-day moving average there, but maybe a 30-day moving average. Maybe that wait until that comes down and meets it, and it starts higher lows.
Yeah, I mean, I had another look at this. The problem they have.
Yeah.
So the specific problem is with the naira, the Nigerian currency.
Yeah.
So revenue guidance has been cut quite substantially. So whatever facts have caused it, revenues are now going to be significantly lower than they'd previously forecast. And because of that, because there's so much operational gearing in this business, that really hits profits even more substantially.
Okay.
So this is what happens when operational gearing is great. This is when the company doesn't require any more cost to deliver more revenues, therefore it flows straight to the bottom line. It also works in reverse. So it's something to watch out for when you hear companies talking about operational gearing in a positive. It can work both ways.
Yeah, Paul says SCS delayed results a week, taken over. ASOS, Ashley, can lightning strike twice. Do you hold in ASOS, Paul? Maybe. I don't know if I don't know what I think he's just building. I think he's building a majority position there, and he'll just basically vote the board out, won't he? I don't know. Probably.
It depends whether he wants it or not. He likes, as I said, he likes playing this game. He's done this before with companies, and it hasn't resulted in a takeover.
Yeah. He just likes to trade, Mike. Yeah, likes a quick trade. But he trades, and his level of trading is a different level.
He's buying an option. He's buying an option, really.
Yeah. Well, it didn't really fit in with his, he's like, the infrastructure and all that stuff would fit in with his stuff, wouldn't it? So Gregory says ASOS showing consumers are cutting back on spending and saving up to pay for heating bills. Yeah.
Again, well, yes and no, because
Paul,
we've seen
today. Why did you do that, Paul? Don't buy because you think it's a business to be taken over. Buy because it's a good business.
I mean, we've seen some.
You may get lucky on that, though.
Maybe. I mean, we've seen some really good, trading updates from companies like Next and Dunelm, and M&S is making a bit of a comeback. Who else that was there this week? I mean, Angling Direct, which I'm still really. I had another look at this company. I really like it.
Have you gone fishing?
Not yet, but I'm fishing around. But there's there are strong retailers and there are weak retailers.
Yeah.
And I think the strong are getting stronger in an environment like this. Yeah. So maybe in aggregate, there's some weakness, but what it also means is the money's going into some companies and not into others. ASOS and boohoo had the rug pulled from underneath. They just can't. Their model's changed. The market's changed from underneath.
There's so many competitors out there now. From Chinese competitors, overseas competitors, even own brands have got their own websites. I mean, it's they've had it from being the only kids on the block, pretty much.
Exactly.
It's complications. Okay. What else is there? Something else here I want to see. Cabs there, Cornerstone's there, Lloyds Bank, Power Metal. Just quickly cover those. I've done a business update. Covering lots of different stuffs. They've got so many things, so many fingers, so many pies.
Yeah.
But once the resource sector turns, I think some of it could do well because
there's one aspect
11 million.
There's one aspect of it that particularly interests me. It's that there was their Athabasca uranium exploration.
Yeah. I mean, it's been hammered, like I said, and obvious downtrend here. But like I said, they've got so many fingers, so many pies there. Once the resource cycle turns, and there are some good resource companies out there that explorers they will rally very strongly. I mean, they're excellent fishing areas for 5-10 baggers. They can go from literally sub 10 million to 50 million when the resource play turns. But that's going to take a little bit of time. Like I say, it's dependent on China largely and all that stuff. But
But that's why I like the I'm interested in the uranium project. Because that's going to be a very strategic commodity.
Did you look at Upland is look at that. Upland is the biggest fall today because it's one of the biggest. Can I just say, ladies and gentlemen, don't chase stocks that have gone up by a couple of 100%. It doesn't play well. It doesn't work. Very rarely they keep going up, but very rarely.
See, that's interesting because people do and maybe should, because it's a massive factor in returns. Follow momentum, but that's different to momentum.
No, this is. When I say momentum,
I just want to make that. I just want to make that clear. The distinction clear. There's a difference.
When you see a volume building in a stock, and slowly, you can see the share price go up a couple of percent each day, and then maybe you'll have a big day. But when you see 100% in a day, careful. Avoid extremes either way. Big fall downs, big up to that. Just go in the middle somewhere. RWS had a big. What else was you coming there? Did you look at Lloyds at all? I mean,
I had a read. We haven't covered it, but I had a read. I mean, it's a huge jump in profits.
VINO. So now one of the largest online or some VINO distributors.
It's pretty big.
Largest direct-to-consumer online wine retailers. There we are.
It's been a tough market. It's been a really tough market. Costs have been up and delivery costs are up. So it's been just difficult for them. Naked Wines obviously being the other one. But they've sort of, if the ship appears to be steadied, and customer numbers seem to be on the up again. So yeah, and they're signing lots and lots of partnerships, which is really helping with securing those new customers. So yeah, I mean it's so tough times, but you can is the worst behind it would be the question.
Yeah. So 20 million market cap. Let's look at this. They got the turnover 59 million, down from 69, of course, in line with expectations.
Oh, it all looks horrendous.
Yeah. It's not that bad. They got cash to them. If you look how much they're burning,
£5.5 million quid.
How much they? Yeah. So they got. I mean, how much are they losing? Actual losing? Or are they making revenue finance costs? They're not losing that much for us. They got £5.5 million. They're only losing. It's not a huge amount.
I think they got through a couple of million in the last year, in this period. So
yeah, well,
over the last year, the cash is down, but they're still £5.5 million.
Exactly, they got 146. They use 146 grand in operating. So to me, the 50, they're turning over, 60 million. They can get a little bit of a margin out of that, and they got cash. And like I said, that's come off massively. I mean, it has look at that. It's a rallying expectation for this. But when is that from? July. That's a cracking rally from 28 pence. So it almost bounces. There'll be a Santa bounce, not a Santa rally. I just thought that earlier. A Santa bounce, I think, which will then roll over a little bit, and then people think, "Oh, the market is on. It is alive. It's not dead. It's like it hasn't flatlined." But anyway, wines there.
No, just going back to Lloyds. I did have a quick look at Lloyds, and they were good. They were good numbers.
But
you are seeing a bit of softening. Of the growth rates, profit growth rates, because the net interest margin is getting squeezed. They have to start, raising interest rates for savers, to make sure they don't, lose customers.
Yeah, pre-tax profit of 1.9 billion for 3 months.
Yeah.
Wow. Up from almost 4 times or 3 times at least, pretty much the previous period last year. The latest concerns: banks are raising borrowing rates much faster than they are saving rates. It's true, isn't it? Said co-executive of Direct Campaign with Positive Money says they're filling their coffers whilst ordinary people are pushed into poverty by soaring interest rates.
Which is why, but that's why they're having to pass, some of the rate increases on, and that's obviously having an impact on the net interest margin, which is really underpins profitability. You're seeing some pressure in its sort of lending books, and pressure in deposits. People starting to spend money to cope with the cost of living increases. So yeah, it's I wouldn't invest in banks. I'd never like banks.
No, but I'd only do it. Barclays hit a low yesterday, and in fact, I think it was Paul that asked me, "Would you invest in banks?" I said, "I don't really understand the balance sheets because their assets are liabilities, liabilities are assets." And I said, "If you hit multi-year lows, maybe in the Barclays or Lloyds, it'd come back." And in fact, the Barclays shares yesterday, they went down below that, and in fact, that range is probably a bit down there, but they are down below that range pretty much, and that is now multi-year low.
Have a look at Lloyds as well.
Lloyds is a bit more steady than that. But it's true. Is there a way of being, morally correct? Oh, look at that. That's still down. I mean, I've put a few lines there. It's broken that up, coming down there. And we are, again, same as Barclays, it's hitting multi-year lows there, pretty much. And I don't fear that out of the woods yet, really. I feel it's going to be more weakness there.
Remember they said banks too big to fail, but they're also too big to manage. Too big to understand, too big to invest in. Businesses there's too many moving parts.
Yeah, can't they be ethical? Like we see the same with supermarkets. They got questioned over their price rises, and all of a sudden they start bringing their prices down.
It's not their job to be ethical.
I know. Well, exactly as I'm saying. But I know that what that lady doesn't understand is complaining. They are a business. They are a business, and they have to make money. Okay, so they're making more money than they should make, but they are a business. But isn't it a way of doing both? Like I said, even with petrol, they tend to raise petrol prices up very quickly, bringing down very slowly. Same as savings and loans that they're, loans, interest charge on loans go up very quickly. But then passing that on to savers, the high interest rate, takes a lot of time, doesn't it?
Well,
thinking, can they just be a bit more transparent about
it? This is an existential debate with regards to shareholder capitalism.
Yeah. There's another one, the cap on bankers' bonuses to be abolished. In fact, there's a lot of people who can complain about this, but first of all, it will attract more bankers to the UK because there's, but also banks I've read about this, have had to put up their sort of basic rate more to make them less competitive. And they said now it's not the same as the Great Financial Crash because they didn't have deferment of bonuses or clawback. Now they do. That's been put in place. And so if they do something that's malicious or not right for the bank and they just to earn more money because there's more risk, then it can be clawed back if it falls back in their face. So
I was listening to a chap yesterday from the High Pay Centre talking about this. And actually this policy makes sense to scrap the bonus cap. Because all that was happening, as you say, the fixed salaries were increasing, and what that means is that let's say bankers then do something stupid or underperform or whatever it might be, they're not suffering because their fixed pay is already higher.
Yeah.
So at least with a bonus, it should reflect performance. The counter argument is why it's all so complicated. Is that actually a bonus-led culture potentially encourages bankers to take activity which can be very damaging to the economy as a whole, which is kind of what we've seen on various occasions, like LIBOR rigging.
They changed their structure. Yeah, they, after 2014, they changed the bonus structure where it could be deferred and it can be now clawed back, which it wasn't in the Great Financial Crash. They get paid the bonus for Christmas, basically, and then the bank will collapse. So I'm out of here with my bonus.
The bigger question is, why is bankers sort of reaping the bonuses above anyone else? This sort of indicative of a financialized society. But no, because money is not moving to where it needs to move. This is sort of the problem. This is the problem I think we have with the markets as well.
Yeah.
They're supposed to be a place where young companies can come, attract the capital they need to grow and reward shareholders who've taken that journey with them. And it's sort of just become a place where speculation happens.
It's
sort of lost their purpose.
Yeah, Tim Apple, Mike Fraser. In fact, we should do a series on that. Any more heads of companies?
Tim Weatherspoon.
Tim Weatherspoon. Bill Soft. There we are. Bill Microsoft. Bill Microsoft. That's him. Currently reading Damaged Goods about Philip Green. Okay, cool. That's Phil. Good show yesterday, Johnny says, with what's his name?
Jamie Constable, singer. Yeah, he's good. He's really good.
Those guys, when you're in companies like Singers, they over a lot of data, and what they're saying, I think, echoes what we've been saying, really. Which is nice. Dexter, when we have no data, we're just wigging it. Dexter Burt, Angling Direct, 70 million cash, 20 million stock on balance sheet, trades at 28 million. Yeah, we talked about it yesterday, actually. Angling Direct, Gregory says, I'm going fishing the weekend. Can you post me 4 pints of maggots quick, please? Yeah, they could do that online. It'd be quite good.
Seriously, I'm looking at Angling Direct. It's the one that's tempted me the most recently. I can't quite believe it's a fishing retailer that is the company that I'm most interested in.
The thing is, though, there's seasons in fishing, isn't there? I mean, Christmas is a good time for fishing gear, though, because in fact, last year, my kids started going fishing, right, with their friends, because their friends like fishing. They started going fishing. They didn't have much kit. So we bought them a load of kit this summer before last, and they didn't have any kit. Bought them a load of kit for Christmas. They haven't gone this year. But
that's kids.
You had none of the kit the year before. You were going fishing every day. What's going on? Anyway, I like Nick says I like Angling Direct too. Value play due to cash too. SCS offer yesterday, great business but huge cash pile. Lloyds need to cover defaults which are rising. Mr. Steve, Nick, Oracle of Omaha only holds one bank now. That's Bank of America. Yeah, okay. Anything else? Oh, just one more thing on the. Anything else you looked at, John? Any companies? But
I'll tell you what we haven't talked about, but maybe we'll sort of wait to the end of the week. US earnings reporting.
Oh yeah,
season is in full swing. We had Microsoft.
Yeah,
so that was very strong, and Google, which was less strong. It's a bit of weakness in the cloud business there.
Microsoft has they've really got that. You'd think Google, they missed an open goal there with AI, didn't they? I mean, Microsoft has the steal on them, got a stole on the march on them there, because their ChatGPT. It's almost like there's only room for one big player in any market, even search. Google beat Microsoft at search, right? And now Microsoft has beat them at ChatGPT. But you realise these companies are huge, and ad revenue is down as well for but it's about cloud as well, cloud and AI, isn't it?
I mean, there's several big competitors in cloud. You have got Microsoft and Amazon and Google.
But you got AI in the cloud now. Microsoft's AI ChatGPT is the go-to. It's like almost like it's now, it's like the verb to Google. It's now ChatGPT to do ChatGPT. So that's they're telling a story there. But they grew like by 28% top line. That's amazing. You'd like that from a small company.
Yeah.
And like I said, you tell how influential those companies are. We are probably using, on a regular basis, 2 or 3, at least one product from those Magnificent Seven, like Apple and Microsoft, Google. They infiltrate the globe. They're so big. But anyway,
what's the old truth? Elephants don't gallop. Well, Microsoft would suggest otherwise.
I read an article recently, about a month back, on these companies saying they are unique. I think it's Jeremy Grantham, actually. So they are unique. They are companies that are growing very quickly, but they're huge. And this never happened before, constantly, in the last 5-10 years. And they are absolutely behemoths, but they're still growing very quickly. Scary how fast they're growing. Anyway, Bank of England in their last bit. They said they're going to keep the interest rates on hold. And this is the thing, right? They won't take any chances. And they really don't want to see the market's price in a rate cuts. They don't want the market to price that in, because people get ahead of it. And then, prices, people start spending again. It's okay, it's done, inflation's gone. So they'll talk a bad game, a nasty game, a gloomy game, but really they're going to be bringing interest rates down next year. And of course the markets will price it in. That's what the markets does,
Jamie Constable Singer said, he wouldn't be surprised if the UK if it ultimately becomes, I'm pretty sure he said this, but the first country to cut.
Yes.
Because the economic fallout is really starting to mount.
And bring it back round. That's why you start looking at decent UK stocks. They're being bought up by people who know their stuff. And like I said, okay. Andy says RWI received 775 bid last week, currently 680, price drifting lower from 750. Sometimes stocks trade discount to the bid price, providing opportunity to get in lower than the bid. Yeah, good. Nick, a lot of UK tickers are still, I read an average 1 a week. We need the IPO market to start recovering. Paris or Frankfurt will overtake London. They might even make a bid for listed company. No, but IPOs around the world are slow. America is the deepest capital markets. They're getting some, but IPOs, honestly, they've suffered globally.
We did have one today on Aquis. Aquis is actually, back in the
I mentioned that. Yes.
It was Cycle AI.
What's the ticker there?
What is the ticker?
Cycle. You're saying
CYK. CYK.
CYK. Oh, Cycle AI. What do they do?
It's
good question.
Great detail, but it's
software is developing advanced artificial intelligence products. Okay. Yeah.
It's basically, what is it? Making mundane digital tasks such as filling digital forms, managing work tools like spreadsheets, or booking meetings and holidays infinitely quicker and easier. Yes, please.
Yeah. And by the way, it's a sign of the bottom of the bear market is lack of IPOs, a drought in there. And like I said, we've seen so many charts where the IPO happened, back end of 2021, middle of 2021, there's a bull market, and that's typical of the top of the bull market as well. So we are near, ladies. I think literally we'll have a Santa bounce, and that will realize the market's alive again, and then it'll roll over a little bit, and then central banks will say, "Oh, we're winning the war on inflation," and then it'll start taking off. Because next time, listen, October last year, we've been going on for a long time, but October last year, 2% in 1 month, the inflation went up, right? And that didn't happen for a long time. It's normally half of 1%. So that drops out. So we're likely to see below 5% before the end of the year for inflation over here. And then we'll have interest rates will be higher than inflation rates. So anyway, on that exciting note, cheers, John.
Thanks.
Speak tomorrow.
Justin.
And it's a Thursday tomorrow. Right? And don't forget, subscribe, download the Vox Markets app, please. Thank you very much for watching. Much appreciated. Bye. How do I get off this? I was still live.